bank write-offs, which are coming at staggering 10.57 lakh crore during the last 5 years or the last 5 financial years, of which 5.52 lakh crore was in respect of loans pertaining to large industries. The government has now informed the parliament. Now, scheduled commercial banks have written off an aggregate amount of 5.52 lakh crore in respect of loan pertaining to large industries and services during the last 5 years, that is from 2018-19 to 2022-23 onward. The scheduled commercial banks have also recovered 7.15 lakh crore of the non-performing assets during the last 5 years. Government says it has in fact taken comprehensive steps to recover NPAs. The NPAs, of course, continue to mount. Joining us on the show is Subhash Chandra Garg, former Finance Secretary. Mr. Garg, thanks very much for taking time out. Good to have you on the show. At 10 lakh crore rupees, sir, would you say that NPAs are in fact at an all-time high, although there's not been much of a change since 2018?
So the NPAs which are currently included in this 10 lakh crores plus amount are largely from the industries, large industries in the infrastructure segment, as you also mentioned. That seems to have peaked because not only the lending to these segments, which were made in post 2007-8 boom period, that is over. No more of such sort of credit is being extended by the banks. But in fact, the credit to the industries and the infrastructure segment has virtually collapsed from somewhere around 43% of the bank credit in 2008 or so. It's now less than 25%. So as far as the old NPAs in industries and the infrastructure segment are concerned, that NPA cycle definitely has peaked. Now we will probably need to take care of the new areas where NPAs might emerge.
And what are these new areas?
So in the new areas, there are basically two big segments. One is the unsecured personal credit, which recently the RBI highlighted by raising the capital charge thereon, so that banks are being advised to assign more capital for that. And the second one is the MSMEs loans, which are both, number one, secured by the emergency credit line facility, guarantee facility, which the government extended in 2020. That had about 3.6 lakh crores worth of loans extended thereon, including very troublesome sectors like the airlines loans, Spice Jets, and the Go First, etc. Of that order. So that's one area where the NPAs are likely to emerge significantly. And the other one, as I said, is the personal unsecured credit, the credit cards and the other loans which don't have even any collateral. Even in the personal loan space, some of the credits which are secured, for example, vehicle loans or housing loans, may also see stress in times to come. So these are the two new major areas where we might see non-performing loans expanding.
Mr. Garg, good evening. Nice to have you back with
Yeah, good
us after a
evening.
very long time on Business Plus. I want to first of all understand from you, at 10 lakh crore rupees or 10.5 lakh crore rupees, how big is the problem? Is the problem worrisome, or do you think this problem is something that banks can easily absorb, given that overall the banking results in the second quarter of this financial year have been fairly okay, and with the RBI stepping in, doing this changes in the risk weights, etc., is it a problem banks can handle, or is this a worrying number for you?
So any NPAs of this order will always be worrying. At some point of time, couple of years back, our NPAs reached in the public sector banks more than 10% of the credit outstanding. And if you relate it to only industries and the infrastructure credit outstanding, that exceeded more than 25% of the outstanding credit. So that is very, very troublesome. Nowhere in the world you have this kind of NPAs.
Okay.
And the government was definitely very worried. The kind of capital infusion which the government did between 2018 and 2021 of more than 3.5 lakh crores
Yeah.
was to help the banks come out of this. Fortunately for us, some of the segments of the industry, for example, the steel sector for that matter, also came out of the demand supply gap cycle. The
Right.
demand picked up. Also, thanks partly to the expanded capital expenditure program of the government. So, and the third one, which you mentioned, as the housing loans and personal loans, system of credit interest on that
Yeah.
was changed, linked to the repo rates and all,
Right.
which provided higher margins to the banks
Right.
in last 2 years, and which made their profits go up. So all the three put together, massive capital infusion by the government,
Right.
certain sectors turning around, and also the large scale profit coming from the personal segment. I think
Right.
that
Mr.
made
Garg,
the
contextualize this information for us. At 10 lakh crore rupees, we know that the number is big, but is it as bad as the situation was before 2014, which is when the government started with the banking reforms and actually started recognizing bad loan as a problem? Prior to that, we had heard about NPAs, we had talked about NPAs, but we hadn't done really much about NPAs.
So before 2014, the system of quality or the credit review, which was instituted in 2015, was not in operation. And therefore, there were lots of stressed loans not officially classified as non-performing loans. So they were loans which were stressed and under difficulty, but not recognized. After 2015, after the quality control was put in, the skeletons started coming out of the closet, so to say, and the non-performing loans started piling up. That process went from 2015 to 2019,
Yeah.
and that is where this number peaked at about 10 lakh crores. These loans were there, and the kind of problem which were there in the industry, a lot of capacities came up in power sector, in roads, telecom, where the profitability was became a problem. And when it was also joined by the sectors like steel and aluminium, the goose was cooked, so to say. And therefore, the situation started changing after 2020, as I mentioned earlier.
So,
So, if you take it 2014 before, of course, the NPAs in the form of stress loans, but not officially recognized as NPAs were
So,
present.
Mr. Garg,
But
we are
later on
running
this year,
out of time. Sorry to cut you short. We're running out of time. I just want a one-word answer from you. The banking reforms that we celebrate and the banking reforms which have become a legendary story of India's prowess in the banking sector over the last 10 years or so. In your opinion, have the banking reforms paid off?
in fact, there are no real banking reforms, unfortunately, to my mind. I don't know which reforms we talk. Capitalization is not reforms. Privatization we wanted to do, we didn't do. So what reforms we are talking about in banking?
Cleaning up of the bank
bad
balance
loans,
sheets.
cleaning up of balance sheets and distressed banks coming out of the well are the reforms that we talk about, sir, which
Yeah,
apparently have kept us in good stead during COVID and even after the US banking bloodbath.
no, that is not reform, by the way. You're paying heavily for that cleaning up. If the government has to put in 3 lakh crore plus of capital, this is a very large infusion of taxpayers' money. I don't think this is reform.
Right.
If you're overcharging the house loan borrowers or the vehicle borrowers, and keeping the deposits rates low and creating margins for the banks, that's not reform of banking reform. If the steel sector in the, and some of the other sectors in the economy come up, that's not reform. Unfortunately, there are no real banking reforms in the country.
All right, Mr. Garg thinks otherwise, Kartik. But Subhash Chandra Garg, thank you, sir. Always a pleasure listening to you. Thank you very much.
Thank you very much. Thank you all. Thank you very much.